Hey, everybody. I'm Matt Erpelding, the Vice President for Government and Community Relations, and we have a great panel today to discuss the streaming program without the care. Before we start, the Boise Metro Chamber of Commerce is Idaho's only 5-star U.S. Chamber accredited member, and we're a nonprofit dedicated to advancing our economy and our community in the Treasure Valley. We are lucky to have so many supportive members, and today's event is sponsored by the Bank of Idaho and SelectHealth. Their investment in us makes it possible to bring high-quality seminars to our community. So thank you so much to the Bank of Idaho and SelectHealth for your support. We have 3 incredible panelists, learned who, after graduating Georgetown University Law Center in Washington in 2001, came back to Boise to be an insurance defense firm as a litigator. After 5 years, he burned out, left the field, and became a teacher. He spent 5 years teaching high school math, physics, and theater, all subjects that he studied over the years. And in 2001, he was ready to give law another chance. So he opened Learned Law, intent on working with families and small business owners to solve problems that really matter to them. Scott is the chair of the Small Business Advisory Committee and has been doing an incredible job for our organization advocating on behalf of that council. Diane Bevan is the executive director of the Idaho Women's Business Center and CEO of the Idaho Hispanic Foundation. Diane has built her career making connections and building businesses. She started her first business in high school, designing and sewing prom dresses, and has been an ongoing entrepreneur in some capacity since then. She studied communications at Brigham Young University and has used her skills to create multiple businesses in Texas, Tennessee, Pennsylvania, and Idaho. Additionally, Diane was the first CEO of the Idaho Hispanic Chamber of Commerce and found great success advocating for the Hispanic community. And finally, Caleb Dimmick. Caleb has been in commercial lending for 10 years and leads the commercial loan and retail banking divisions for Bank of Idaho. Caleb was born in Idaho Falls, but moved to Pocatello, where he received his finance degree from Idaho State University, my alma mater. He's lived in Utah and Alaska before moving back to Idaho Falls to work and raise a family. He loves banking because of the opportunity to make lasting connections with his customers and help them navigate owning and growing a business. He loves to find creative ways to get his clients what they need while effectively managing risk for the bank. And so with that, I welcome our members. I'm so excited to have them today. You know, Scott and everybody, and Diane and Caleb, thank you all for being here. This Main Street lending program is at a minimum complex and difficult for businesses to wrap their head around. So today's conversation is really going to wrap around that. Scott, you're the chair of the Boise Chamber Small Business Advisory Council. What are you hearing from members, and what kind of support are they requesting as this pandemic rolls on?
Yeah, thanks, Matt. Thanks for that introduction. And, you know, I think that the struggle for business owners right now is just all the uncertainty. I mean, it just feels like, you know, it's hard to even know what are reliable sources of information, what are reliable strategies for dealing with the pandemic. So I'm hearing a lot of requests for, you know, not just funding assistance, certainly funding assistance, but guidance on how to help employees feel safe when they come back to the workplace, make sure they are safe when they come back to the workplace, dealing with customers, dealing with, you know, revamping business operations. I think the thing that we've all learned over the last few months is how totally unprepared the business community really was for an event like this. And the way we've been doing business in a variety of industries for many, many years is not how we're going to be able to do business going forward. So things like social distancing, you know, how do you, for example, run a restaurant with social distancing in place, and all those sorts of things. So I think that the biggest issues, you know, being a business owner is a challenge at the best of times. And with all the sort of political uncertainty, the pandemic, I think what most business owners are hoping for is just kind of some real clear guidance on, you know, do these things, don't do those things, because there just doesn't seem to be a lot of that kind of guidance out there right now.
Yeah, it's a real challenge. And Diane, the Idaho Women's Business Center is just committed to advancing women-owned businesses, and this time has been tremendously challenging. How are you pivoting to continue to provide services to your members and to help advance that mission?
That's a great question, Matt. You know, we haven't even hit our first year anniversary, and we had already, you know, from the very get-go, we're planning to be a statewide organization, and we already had a lot of things in place to be virtual. So for us, in the initial onset, it was actually fairly seamless. We didn't have to cancel any of our events and went to a straight virtual platform. And we have been really overwhelmed with the number of women we've connected with in some of the farthest corners of our state. But knowing that, we still even have more pivoting to do. So some of the things that we've done differently, we have brought on some more counselors, that one-on-one counseling. I mean, to echo Scott's point, I think that so many small business owners have had kind of a wake-up call, that aha moment where they've realized they do have to make some really big changes and things won't go back to the way they were. And so those ongoing conversations, we worked very closely with SBA because we know their phones have rang even more than ours have. So in our way of pivoting, it truly is just bringing on a lot more of our team. Our team has needed to grow to accommodate. Just to kind of give you some rough numbers, in the first 2 weeks, we had set up an emergency portal on our website just for people to let us know how they were doing and some of the things that they were experiencing. And within less than 2 weeks, we had 263 women-owned businesses that had reached out to us, to the Women's Business Center, for help. So we've brought on Simon Mahler, who's an adjunct professor at BSU in entrepreneurship. So we brought on some extra help and just tried to beef up our team.
Wow. Caleb, Bank of Idaho has a long history, and I think your slogan is "People bank with people." And so that interpersonal interaction has been critical to the growth of your bank. And how are you pivoting in this new virtual world to make sure that you still maintain that connection with your members and that ability to serve them?
Yeah, that's a good question, Matt. I appreciate that. Just thinking about it. I love the slogan, "People bank with people." And what's been interesting about this pandemic is it's kind of forced us to some degree to quarantine ourselves and isolate ourselves from people. And I think that's made it difficult for a lot of us that rely on each other to get through hard times. It's been stressful and scary for us and our customers, for sure. But, you know, like any crisis, I think it's also an opportunity to make your organization stronger and people stronger. We're a pretty resilient group of people. And I think there's been a lot of ways that the pandemic has made us stronger. To answer the first part of your question, kind of how have we adapted to the virtual world? That part has actually been great for our bank. Pre-pandemic, we had access to Skype and Teams meetings. They were being used, but there was a group of people in the bank that would probably not really understand how to do that, and maybe only do it if they were forced or had to. And now after the pandemic, they're pretty knowledgeable and they know how to jump on a Teams meeting and work from their cell phones and work from home. Things like the trainings and the meetings and webinars and being able to mobile conference and send people home and have them work for their living rooms or their basements. That's been phenomenal for our productivity. With the resulting kind of restrictions on travel and what we could do, we were still able to maintain operations and be efficient and get a lot done. And a lot of our banking partners can say the same thing. Yeah, we were able to do incredible amounts of work through the PPP loan process, all because of our ability to adapt and utilize technology. From a customer standpoint, and kind of how do we maintain that connection? We're trying to give our customers more mobility options as well. We're spending a lot of time talking about online banking and remote access to our services, things like mobile deposit, where you snap a picture of a check, remote deposit capture, and just online banking in general. What can we do? Game changer for us. It's fun. You guys are going to laugh, but DocuSign is not new, but it has been awesome for us. We didn't use it before very often, and now we're going to kind of make it mainstream, and we love it, and our customers love it. So there's been a lot of things that have been positive throughout the process. The other thing that it's done is just to kind of wrap up your question is it's brought our customers and our team closer, as we've all had to kind of rely on one another at one point or another. And I'll just share a quick story. At one point, this was after our first round of PPP lending. It was like 700 loans. It was the equivalent of probably 3 years of lending compressed into 6 weeks. There were long nights and weekends. People were tired. And Jeff Newgard had the great idea to ask our team if they wanted to continue with round 2 and kind of scale the next mountain, is kind of how we saw it. And it was a really special, emotional meeting. It was a time that we kind of left it up to the team. We said, guys, what do you want to do? Do you want to keep going and help, the rest of any other people that might apply? And there were comments about wanting to help be there for our customers and not leave them hanging. And so they, resoundingly just said, yes, we're going to keep going. And that experience and a lot of other experiences kind of galvanized our team. And with the customer experiences we've heard back, that we had a hand in helping save their business and keep them feeling positive and hopeful for the future. Actually, a very great experience and feeling throughout. So yes, I think people do bank with people. And even in a pandemic, that can happen. It's been a great experience.
That's true. I mean, you talk about, I never once thought I'd learn how to use Facebook like this. So I mean, I get it. Talk about adaptation.
That's right.
Scott, you represent small businesses. You've worked with small businesses, and they're the folks that are just hurting right now, whether it's this accordion effect, as you know, Ada County went back to phase 3 because we probably opened too quick. And then, we've had a big outbreak of cases. But do you have clients that have been able to access either the PPP loan, the economic disaster and injury loans through the SBA, or Idaho Rebound grants that Governor Little has put out?
Yes, definitely. And, speaking personally as a small business owner myself, I applied for a PPP loan. And that was a major tool in keeping my doors open during that 6 or 8 week real serious downturn. The phone just stopped ringing, and I wanted to keep my staff on. So it was very, very good for me to get a PPP loan, speaking personally. But I certainly know of organizations that have got the Rebound Idaho cash grants, the $10,000 grant from the state. I don't have a lot of experience with the emergency disaster loans, but I do know a lot of companies that have gotten PPP loans. A lot of my clients have, and I gotta just say to all the bankers and lenders and credit union people out there, they really did a bang up job from my perspective. Anytime the federal government tries to put a program together in a couple of weeks and sort of throws it out to the business community and says, you guys figure it out. It has the potential to be a train wreck. And I know there were some bumps in the road on the PPP loan, but I think because of all the great organizations, at least here in Idaho, that were doing those lending decisions, I think by and large the PPP loans went pretty well in Idaho. That's kind of been the word on the street here. I think you guys, Caleb, correct me if I'm wrong, but I think there is actually still PPP money out there available. They've made the PPP loan program a little bit more useful for people. And so, I think if businesses haven't yet done a PPP loan, they can still do that. They can look at a Rebound Idaho cash grants if they're not going to do the PPP. So definitely still some options out there for folks.
And recently, Congress modified the PPP loan so that the time which they use has changed. And maybe we'll have Caleb talk a little bit about that if you prefer. But Diane, I wanted to get to you because people are here because they want to learn about the Main Street Lending Act. So if you would give us that high-level overview. What is it, and how is it supposed to work? If you can.
Absolutely. But before I do that, I have to echo everything that Caleb and Scott said about the PPP before we jump into the Main Street, because we have seen so many miracles and blessings because of the PPP loan, because of the EIDL loan, and to the tune of thousands and thousands of dollars. And so I am so grateful for all of the financial institutions that the Women Business Center works with. We've had a huge success. So let's jump into the Main Street lending program. I first want to say that it has been really confusing, and let's talk about why. So it was first announced, actually, the very first time we heard about it was way back in March. And about the end of April, they came out with another announcement about the end of June, or about first part of June. And I can remember that on June 6th, the report to Congress still reported that there were no transactions yet to report. And so, as with the PPP and some of the other lending resources, is it has taken time. It has taken a lot of time. They have, I think they've learned from some of the experiences of the other programs to really vet it out and to make some changes before really it actually starts. Some announcements were made in the last couple of weeks that did make some changes. But let's talk about first what it is. So the Federal Reserve established the Main Street Lending Program as a way to help small and medium-sized businesses that were in sound financial condition before the onset of COVID. And we don't want to discount that word sound financial condition, because this is a little bit different type of product. Originally, the minimum set on it was $500,000. $500,000 is a lot for and maybe not even applicable for a really small business. A lot of the clients that we work with the Women Business Center are sole proprietors or under that 5 employees. So let's just kind of jump into the meat and potatoes. I took a 60-page document and I turned it into a very little small overview for you. So we're going to jump right in. So the Main Street program has actually 3 arms to it, but the one that you'll hear the most about and that you'll see most linked with our financial is what's called the new loan. And of course, we have a gazillion acronyms, so that's kind of known as the MSNLF, which is the Main Street Loan. It's the new loan program, the new loan, what they call a facility. And that's the one that'll be hosted by our lenders. The other 2 will be hosted directly through the Reserve Bank. They're a different type of a product, which I won't spend any time really going into that today. I think if I try to dive into all 3, I'll really confuse everybody on this call. So we're going to kind of stay away from that one. But some of the highlights to this new program is that, first of all, it is a loan. It is not, that is the biggest way that it is different than the EIDL Advance or the PPP. It does not have a forgivable option. So it is a loan. The minimum, like I said, it started out to be $500,000, but then in the most recent changes that we have today is they have lowered that minimum to $250,000, but they've also raised the cap. So the cap was also raised for those that need a little bit more. I think when businesses are trying to figure out what do they need to stay sustainable, what do they need to make it to what we're going to call the new normal when this has ended. But because of that unknown factor, that it's really not determined. And as Matt alluded, we've already taken 1 step forward and 1 step back in our phases. And so that unknown is something for business owners to really take into consideration. And I reached out to several of my financial institution friends today to ask them their feedback on some of these programs. And one of them said it very well when she said, it's really something that they're going to want to discuss with a CPA, with accountant, with their legal team to make sure that it is a debt or a loan that they want to incur to have that sustainability. Some of the other things that changed just recently were the extended payment terms. As if you have some experience with the EIDL loan, that is a term up to 30 years. And so the payments are really small. With this new product, with the Main Street new loan program, is that it was extended from 4 to 5 years, but it still does have that 5-year payout. One of the few things that they did change was when payments need to start. So instead of having 1 year, they did increase that to 2 years rather than 1. And that gives an opportunity to delay those principal payments on this larger loan product. So who's eligible? that's always a question that we have. You know, as I've done some research, the loan program was put together to help businesses that maybe they didn't qualify for PPP for whatever reason, but still need that sustainability. Can you have a PP loan and still apply for this one? Absolutely. In fact, it may even cover the gap when the PP funds are exhausted. You have to be in business prior to March 13th of this year. Of course, with the same rules as all of our other products, you have to be a eligible business. So you have to be a business that either functions in the U.S., is under the laws of the United States, and with significant operations in the United States, and with the majority of the employees. So let's talk about the employee count. You do have to have 15,000 employees or fewer. When I think as the Women's Business Center of 15,000 employees, I don't, in my personal experience, don't consider that a small to medium business. But when we look at the landscape of the entire United States and all of the small business owners that are looking for that funding, that mid-sized business that ranges probably from, you know, several hundred employees to that in the thousands, really is that candidate, in my opinion, that really does need that $500,000 or that $250,000 would really do what needs to be done to keep them on that. Again, the very, very first definition that I read is that they had to have been in sound financial condition prior to COVID. And that's, I think, a really important part. Retaining employees, each eligible borrower, they really do encourage them to maintain the payroll, retain its employees during the time, the entire period of the eligible loan. There is a transaction fee. From what I can tell, the transaction fee is covered by the lender, and the origination fee is paid by the borrower. Again, some of these things, I think we're still going to see them roll out a little bit. Of all of my friends I reached out to, their organizations have applied to offer this product. And I think in the next week, we're going to learn more, Matt, and it's going to start to roll out.
So what I heard was businesses with 15,000 employees or fewer, minimum
Correct.
loan size is 250,000. You can defer that loan for up to 2 years, but then you have to pay it back within 5 years from that.
Correct.
Did I boil it down?
No,
so Caleb,
that does boil it down. I think I did pretty good to take 60 pages down, but that
I
really
think so too.
that is really the nuts and bolts. And so I think that you know, having someone really look at that and say, is the debt worth taking the risk? And it's the risk that we have to mitigate, you know, because of the unknown of the pandemic.
Which is a perfect segue, because Caleb, part of this whole loan deal is that the Federal Reserve is going to take up 95% of the risk of this, but there's a lot of confusion about the interface between the bank, the originator of the loan, and how that works with the Federal Reserve. Can you tell us about that and how that actually defrays risk?
Yeah, happy to. First, like to thank Diane. That was the part of this presentation I did not want, is to try to boil all that information down into 5 minutes. So expertly done. Good job. So the program, basically the way the Fed is interfacing with the banks and with the customers. The good news is the customers, the borrowers, don't need to deal directly with the Fed. They are kind of being what's called a banker's bank. Bankers know what those are. They're basically banks for banks. So the Fed will work with the lender to approve a participation. Basically, they'll come in and they'll buy 95% of a loan that the bank has approved. And the bank has the option to have that all done up front. So when they approve the borrower, they can send it to the Fed. The Fed can underwrite it, make sure that they're comfortable with the deal, and say, okay, if you close this loan with the borrower, we will buy it from you, bank. So that's unbeknownst to the borrower, and the bank goes ahead and closes the deal and then negotiates with the Fed on the terms of the purchase. So that the good thing is for the borrower, again, is that they're dealing in a more traditional sense with a bank. We ask about application process. What does that look like? There actually isn't an application that the Fed is giving to the borrower. The Fed is saying, borrower, go to your bank and apply. So the banks will actually come up with the way they want their borrowers to apply to this program. So honestly, it's a little bit vague right now, because that any specific direction hasn't been given to the banks as far as, do we create a separate application? Do we just have them apply using our normal applications? That's the assumption that we're operating off of as we move forward with our borrowers. The banks register with the Fed, so the Fed knows who's going to be participating in the program. And so that might be one of the first questions you would ask as a borrower is, has your bank registered with the Main Street Lending Program? And if the bank can say yes, then you can feel confident that you can apply for a loan there and move through the process. The other part of the question is kind of, how does it defray the lending risk? So this doesn't matter too much to the borrower, but it does affect your ability to be approved. In tough times like this, if the bank has to make a decision to make a loan and a business right now in real time is struggling, it's harder for the bank to say yes, even if at the end of the year, just a few months ago, the business was maybe having a banner year. And so this program helps the banks be more comfortable approving loans, even though the borrowers are currently in a quandary. So by taking 95% of the loan off of the bank's books and owning that risk, it in essence tells the bank, you go ahead and underwrite this loan based on how that business looked 6 months ago or 3 months ago. If you're comfortable with the risk under your normal underwriting standards, then we'll go ahead and take it off your books. So if the business continues to suffer and doesn't bounce back the way you like, then the bank doesn't have to carry that load and that burden and potentially put its own financial well-being at risk and that of its customers. So it's a very important aspect of the program because it is what incentivizes the lender to make the loan, even when maybe the numbers don't support it as well. And don't get me wrong, the banks want to do that, but we're kind of nervous right now as well. We're kind of waiting and seeing and hoping the economy will bounce back.
Well, and that's critical. I mean, there's just so much questions up in the air. And to be honest, to your point, Caleb and Diane, this program, Scott, has received a lot of criticism. It was passed with the CARES Act, which happened at the very end of March. It finally went live early last week. So there's a lot of criticism. And so what are you hearing around that? And what are some of the criticisms that you've heard?
Yeah. I mean, certainly the delay has been one of the criticisms, but not the only one. I think, as we were talking, the PPP rolled out so unbelievably fast that I think it's a little unfair to compare this program to the PPP program, just because of the point of the two programs was so different. I think there's kind of some structural concerns that still are going to be there. That they probably won't ever really be resolved. We'll just kind of have to see how they play out with this Main Street lending. One of the issues is, the Fed hasn't been involved in direct to consumer lending since the Great Depression. I mean, it's been almost 100 years since the Fed has had any direct hand in lending to non-bank private companies. And so there's certainly a lot of folks that say, the Fed has no business being involved in this way because, arguably it can really screw up the credit market. It puts the Federal Reserve, in a very political position that the Fed tries to stay out of traditionally. So there's kind of all those issues that people aren't really sure how that's going to play out. There's certainly some question as to what these loans are really supposed to achieve. And if one of the things that these loans are supposed to achieve is to help the unemployment issues that we're facing, one of the criticisms I keep hearing is about, this requirement that companies use. I think the terminology is commercially reasonable efforts to avoid layoffs. And I don't know that anybody really knows what that means, frankly. And so there's always the concern that these sorts of programs are going to benefit a few people rather than the employees that work for these companies, for example. It's going to benefit the owners and not necessarily the employees. Time will tell. There's no real way to know. As we sit here, we can all kind of wring our hands and speculate about it, but until we start getting some of these loans out there into the community and see how they're being used, we won't really know. I think the other issue that a couple other issues that I hear people worried about. One is, to piggyback on what Caleb was saying, a lot of times the point of these loans is you're going to take a company that maybe right now on paper doesn't look like a good risk for a bank. And because the Fed's going to own 95% of that risk, the point is to entice the banks to lend money to companies that they might not otherwise be interested in lending money to. The flip side of that is there may be some institutions that lower that bar way too far. And so there may be companies who under any circumstances would not be a good risk to take. And because the bank can afford to speculate a little bit because the Fed's going to take most of the risk, there's the concern that they may let their underwriting standards slip a little bit too far. I guess the probably the last concern is, the U.S. Financial situation from a federal standpoint is not so great. I don't think it's news that we have a pretty bad budget deficit and a pretty bad national debt. And so, of course, there's always the concern that if you're kind of throwing federal money around, I mean, this is the same concern with the PPP loan. If you're throwing federal money around, obviously, the point of this program is that the money is going to get repaid, but time will tell whether that's how that's going to happen. And so I think there's always the concern that, we might be trying to stave off a short-term economic disaster and creating a more medium or long-term economic disaster of even more epic proportion. So, like I said, hard to say which of those, I'm no economist, I'll tell you that. Hard to say which of those predictions might pan out in the end. So we'll see.
And it's really interesting because those concerns are, the opposite is often in times of low consumer confidence and tight markets, it's really hard to get loans. So opening this liquidity up keeps businesses going and doesn't put banks in a negative position from a loan risk perspective. Diane, you mentioned it in your overview, which was perfect. I want to just thank you because I could not have done that. But talk a little bit about the minimum loan amounts and the payment terms, and kind of identify whether or not you think the people that you advise are going to be able to access this. You gotta. You got to unmute yourself. I'm really sorry.
We have some loud outside noise, so I've been really on the mute button, but sorry about that.
You've been on it.
But no, that's a really great question because when I looked at that minimum of $250,000, my first thought was to some of my sole proprietors and some of the smaller businesses that we work with at the Women's Business Center. But we do have a fair amount of the medium-sized business, and with the repayment terms being extended to 5 years, and in comparison to, so when we're comparing the two, like you've got the PPP, or let's just talk about the EIDL that you can go to 30 years where this one is 5. The amounts were a little bit lower, I think, on the EIDL than these larger amounts. But when we think about how long do these businesses need to stay sustainable, how long do we need to be the bridge between now and back to business as normal? And because we don't know what that is, I think it's good that amount is high. I think that the main thing that the Women's Business Center that I encourage my staff to do is to make sure that our clients don't disqualify themselves. I mean, to Caleb's point and to Scott's point is that maybe a business that had a pretty good business running, but maybe they, for whatever reason, weren't considered bankable before, but as we look at where they're at and where they want to be and what their goals are, they may be a great candidate for this program. And so, it's something that we've never seen before is is these amazing programs that are coming out that truly all have the same goal, and that's to, you know, save jobs and to encourage our backbone of our country, which are our entrepreneurs. And so, you know, in answer to your second question, you know, do these seem to address the needs of the women that we serve and some of the minority businesses that we're working? You know, my first thought was maybe not, but as I've really, you know, dove into this program, I think it could be a fantastic program to really save a lot of businesses. And maybe they need to look at those larger numbers, and as they mitigate that risk, realize that that may be the amount that does give them the sustainability to make it to the end, whenever that's going to be. But I think it's a great program. I actually am excited to see it roll out and see how it kind of evolves. We've watched several of these other programs evolve to be really good and save a lot of jobs.
Yeah, with that ability to defer that loan for a couple of years, you know, it really could be the bridge loan that gets a business through this process. And that's why it's so important that we talk about. Now, Caleb, your challenges, you mentioned that you will develop your own application, but I think Bank of Idaho is ready to start taking Main Street loans. You're one of the banks in Idaho that has committed to this process. What will that look like? And what do businesses need to bring to the table when they get ready to apply for the loan?
Yeah, that's important. Like I said, the application process still a little fuzzy, but in the meantime, it doesn't mean that we're not going to help a customer if they come in and want to apply for the Main Street Lending Program. You know, and as a business owner, I could imagine right now you're sitting back thinking, what do these options mean? What is the best option for me? What can I do? And that's really where a bank ought to be a good resource for you. They ought to be able to sit down with you and go through the various loan programs, get a good idea of what you're going through and what your needs are, what your concerns are, and kind of what you want to do to play offense and defense in the market that we're in right now. And then we ought to be able to craft a solution. And that's kind of how I approach the Main Street Lending Program. It is another option in a basket of a lot of options right now. Luckily, it's like you said earlier, in a downward moving economy, it's nice to have liquidity for small businesses. That's been something that hasn't always been around when we've really needed it. And so I think a business owner is having more resources and options than they've had in the past. But it's nice to have a good banker and a good bank that will kind of help you explore those options and not pigeonhole you into one program just because that's what you came and asked for. And so a lot of the application process will look like sitting down, asking a lot of questions, the banker to the borrower. What are your needs? What do you want? What are your goals? What are your concerns? What kind of things are keeping you up at night? And then using those answers to craft a good solution. And that solution may lead to a Main Street Lending Program loan. That's how the application process is going to look and feel. The business owner is going to probably feel more comfortable, or at least more familiar with this loan process if they've gone through a commercial loan before with a bank. They're going to want to bring 3 years of their tax returns. They're going to really want to focus on their most recent quarter end and year end financial statements, profit and loss and balance sheet, personal financial statement, a debt schedule. So the bank can see just right where they're at right now and where they were at just before all this mess started. And with that information, it'd be a great start to kind of get an idea of what the loan amount is going to look like. As you read through the program, you'll learn that the loan amount is calculated by 4 or 6 times your earnings before your interest, taxes, depreciation, and amortization. And the banker can help you get there and know what that loan amount is going to look like. So there's another part of this, question, and I don't know if you asked it the same way, but I really thought it was funny as I kind of prepared my comments here is, why are the banks not as excited to take these loans on? And I want to emphasize that there is some incentive, right, that the Fed is trying to place on a bank to participate because of the buyback. But I don't know that a lot of banks will really be jumping in wanting to do a lot of these loans. And I'll explain a couple of points as to why. First of all, the different from like an SBA loan, where a lot of the paperwork and the documentation falls on the responsibility of the borrower. In these types of loans, it's mostly on the lender. The lender has quite a bit of legal documentation to get through, to register, first of all, and then a participation agreement that we have to kind of feel comfortable with. And so there's those things that the lender has to go through with each loan. And then the borrower certification is about 17 pages. The borrower doesn't have a lot to fill out, but there's a lot to understand and look over and be sure that you know what you're kind of getting yourself into. The reporting requirements is another item that would kind of make the program seem a little daunting. They'll require quarterly financial reporting to the Fed, and you can provide that information to the lender and they can help you get it to the Fed. But, like with our bank, we're probably going to ask that be at least CPA compiled, because the Fed is expecting a certain level of financial standardization. And that could be expensive as you're talking to your CPA to get every quarter an updated profit and loss and balance sheet and any other information that they're going to ask for, debt schedules, personal financial statements. And every quarter you'll want to provide that. So that's a little heavier than maybe sometimes what some of you are used to as business owners. As I look through my notes here, the other thing is that with the rates in terms of the financing, as Diane explained, it's a shorter term, 5 years. The biggest benefit, I think, to the borrowers, they got those 2 years. The first year, principal and interest are deferred. The second year is interest only. So that's very favorable repayment terms. The third and fourth and fifth years are 15% of principal, 15% of principal, and 70% of principal. So there'll be a little bit of like either refinancing or other financial planning that business owner is going to want to make to prepare to be able to pay that off. So again, partnering with the bank and making sure they have a long-term plan. The other thing is that the rate is decent, but it's not outside of market. It's not 1% like the PPP loans were. The fees are comparable. You're going to pay up to 2%, maybe 1%, depending on how generous your lender is. And so again, it's comparable to conventional lending, which would mean that sometimes it might be better, or the borrower might decide that they'd rather go conventional rather than a Main Street loan if the bank was willing to approve it. So those are a few reasons maybe why your lenders are going to maybe not be jumping in with both feet, but still a good tool to have, mainly because of that payment deferral.
And at the same time, the banks are figuring out how to do this well. Scott, yesterday, Ada County took a step backwards. We went back to phase 3. And taking out loans is still risky business for some of these small businesses. What advice would you give to companies and businesses if they're looking at taking out one of these loans to make sure that they protect their own risk and are still able to open safely and operate to advance our joint mission, which is to maintain our economy?
Yeah, I mean, you say taking out loans is risky business. I think business is risky business, right? Yeah. I mean, business owners are definitely used to taking on risk, and obviously a big key to being a business owner is figuring out which risks you want to take on and where the rewards justify the costs. I was just looking at the CDC numbers, or the Central District Health numbers for Ada County, and we've had of the something like 900 cases in Boise or in Ada County. I guess there've been 1,200 cases in Ada County, and 200 of them have been in the last couple of weeks. And so this thing is not by any means over. We see it's fascinating. I'm sure everybody on this call has observed this, but as you go out into the community and you start going to businesses, you see all of these different approaches to doing this, from everything where some companies don't seem any different than they were in January, and then other businesses, we were in a winery the other day, and they've expanded their patio and they've spread out all their tables and they wouldn't let you wander around the restaurant much or the winery much, you know, and they're really taking it seriously. So the CDC, the OSHA has some really good materials. The state of Idaho has really good materials. And all three of those organizations, you know, I really think every business owner and probably every manager needs to get those materials, needs to read through them pretty carefully and figure out exactly how they apply to your particular industry. You know, if you're in an industry where you don't have a lot of customer interaction, you run a manufacturing facility, for example, what you really have to focus on is how to keep your employees happy and safe. If you run a customer direct business like a restaurant, you've got a whole different set of issues because now you've got members of the public coming through, and you have a lot less control over what's coming in and out of your organization. And so you've really got to think through what your protocols are going to be. I guess the bottom line is you've got to continue to take this thing seriously. This isn't going away, and you know, make sure that you are reading up on the latest research, the latest transmission data. You know, Matt, the interesting thing about COVID is it seems to be, and I guess nobody's really sure if it's changing as we go or if we're just getting a better understanding of it. But, you know, when this thing first started, people were really concerned about transmission through surfaces, where if you touch a surface that somebody has breathed on or has sneezed on, and then you touch your eye or something like that, you can get transmission that way. And it turns out that it doesn't look like that's the major vector. It looks like it's much more sort of person-to-person direct transfer, which is why wearing masks seems to be a good idea. The point being that the science is changing every day. We're learning more about this thing, and we're figuring out really how to protect ourselves and protect the people around us. And so as a business owner, you just have to stay on top of it. I think probably the biggest threat right now, not only to businesses, but just to kind of society in general with this thing, is becoming apathetic about it and sort of shrugging your shoulders and saying it's just going to be inevitable, that we're going to have these rates of transmission and these rates of death and stuff. And that's just what we're going to have to live with. And there's a lot of steps business owners can take. There's a lot of steps consumers can take and should be taking to make sure that they're protecting their employees and their customers. You know, I think the biggest new threat for an employer now is the threat of a mass absentee problem from their employees. And that could come about because you've got a bunch of employees who get sick because they're in close contact with each other. One of them ends up with the coronavirus and they spread it through your workforce before you realize it's in your facility. Or you could just run into a situation where one person has it or has symptoms and everybody decides they're staying home and they're not going to come into work. And so companies have to be prepared for that. They have to be making contingency plans. And you have to just be in constant communication with your employees. That's going to be your kind of number one approach to getting this thing, getting through the next year, 2 years, however long this thing is going to be with us.
Although on a positive note, Fauci did say there's a chance there could be a vaccination before the end of the year, which, I really trust what he has to say. So fingers crossed. Diane, there are so many women and minority members of the community who are working to get their own businesses started. What advice are you giving them as they're trying to get their businesses started in this bizarre and uncomfortable time?
That's a great question. We had a large number of women we were working with before the pandemic. We were working on patents and business plans and prepping them for their SBA loans. And, one thing we have to remember is that one of the things that has changed is the amount of resources that we are finding online. I think that we talked about that at the very beginning is, now Zoom is more comfortable and we're using DocuSign and things like that. But I think that for those, the women and the minority entrepreneurs that we work with that are trying to start and grow a business right now, is just to keep them on that path. They can use their extra time of social distancing to work on their social media and work on their LinkedIn, work on becoming a better leader and developing themselves. But what they have to remember too is that the needs of customers may have changed slightly as well. So as they are looking to launch a business, is to really know what their customers are willing to buy and what they need. And I think that there could be a little bit of changes going on there. But I actually polled my entire team this morning this question, and overwhelmingly my team says that they should stay on their path and to just do it and to believe in their ability to grow and start a business and to not get too off of the path that they were on prior to the pandemic. There's going to be a lot of opportunities open up. There will be businesses that stay strong and continue on, but there's going to be a number of them close. And there's also going to be some new innovation come out of this and inventions. It's very exciting for us to see on our end the ideas and just from even the different pitch competitions that we've participated in with Trailhead, to just see the ideas that are coming out of Idaho are very innovative. And I think that we're going to see some positive, exciting success stories of new business starts come before the end of the year.
That's exciting. I actually probably want to do another one of these where you get to tell me about those. Caleb, as we get to the end here and we're getting close to the end of our time, speculate for a moment. The pandemic is likely to continue to impact businesses for another 5 or 6 months at a minimum. What additional things do you think businesses are going to need as we move forward?
Yeah, I still think, and this is kind of a biased answer, but having a good relationship with your bank and your banker, one that you can communicate with and feel like you have a resource. And I think that would help. And because PPP is going to run out, these programs may come and go. They may not always be available. And so there might come a time where you'll need some financial advice or some ideas on how to restructure some debt or do something different than what you're doing currently. The other thing that you might run into is opportunities that present themselves, as they always do in these types of economic crises, where you want to capitalize on an opportunity, but you need the capital to do it. You need the leverage. And so it's great to have a resource and a banker. Another opportunity would be to get to know your local CDC, which in your case is Capital Matrix, groups like with Diane and advocating for businesses, your local Chamber of Commerce, those folks that keep their ear to the ground for the business community because that's their role. They can provide good, timely advice and be a resource to bounce ideas off of, and also help you network with folks that might get you the help that you need if and when you need it. So I would also do a more reading than maybe what you've done. Try to keep up with the news, even though the COVID stuff I know gets old and it's mostly negative, but to know kind of what is being done on a national and local level to facilitate business. I think it's good to be at least a student of that during this time. And a jump rope, because we all know how tough it is to be active since all this has started.
That's an understatement. You know, the three of you have been incredible, and the Boise Metro Chamber is lucky to have members like you three who are knowledgeable and willing to share your knowledge with the public. And so I just want to thank you all three today for sharing your wisdom and being a part of this. I also want to thank Select Health. Select Health is a member that has been a great supporter of us. And I thought it was amazing they wanted to support something like this for small businesses. That's how much. And then not Bank of Idaho. They were an early adopter of these Facebook Live events. They've been incredibly supportive this entire time. And I do want to say that, and correct me if I'm wrong here, but Bank of Idaho is one of the banks in Idaho that is already set up and able to do community or Main Street lending for people in Idaho. And so we wanted to mention that. And I want to thank you all again. And I want to thank the public for watching. Our next Facebook Live is a ways off, but it will be Senator Pro Tem Brent Hill, and it'll be in early July. So thank you all again. And thanks to everybody who watched today.
Thanks, Matt.
Thank you.
Thanks, Matt. Thanks, Diane and Scott.